Hello guys, how we doing? Cesar again with you. Last time we saw what can happen to our money in the market. So let's look at today what type of asset that we can invest in the market. That is important because as investors we need to be educated on all our options. As you continue with your investment career, so you'll understand that there's many strategies that we'll be using to grow your money and how to invest in what some other asset to invest in. So let's take a look at some of them. So as you can see here that we have the assets is anything you own that produce money. Okay, and a stock is an asset. Liability takes money away from you. You should know. Hopefully you already know that what an asset, what isn't a liability. But if you don't, but we put the definition. Stock is a type of asset. We call them paper asset. Okay, that's mean you don't have something physical in your hands. Once you invest your money, it's a paper asset. It's a stock. You receive, a stock certificate for it. But sometimes now with online investing, you don't receive anything. You just invest your money. You know the company. You know everybody that's involved. And the stock can be both an asset sometime or a liability. We need to know that an asset when it's producing, when it's give you dividend, those are assets. Okay, so you might invest some money and start losing money. In that case, your asset can become a liability. There is four types of asset class when it comes to stock in the market. We have equity, fixed income, derivative, and we have cash. Or if you have cash, you have an asset because you can use it. So, okay, let's look at the four type of asset class that we have in the stock as a paper asset. So, equity. Equity is what we call stocks ownership. Okay, you own the stock when the company grow, and their asset is more than their liability, or when they make money, you have an equity in the company. So you have a claim on the profit of the company. That is an equity. And also, part of the equity we have ETF can be an equity as well, is an exchange traded fund, as you already see that. And then we also have mutual fund. Okay, so that's the third one. Second type of asset, we have fixed income. Fixed income is some of these assets that pay you an interest rate, and that is already determined, right? It's predetermined. If you buy a company bonds or state bonds or treasury bonds, those are assets that pay you a fixed. It's pay you a fixed interest rate. Okay, bonds, we have treasury bonds, we have CDs as your certificate of deposit. You can go to the bank and open a CD, but it's the lowest interest you're gonna get and pay fixed income. So you'll be able to do that. Derivative, number three is derivative. Derivative is based on other asset. Okay, so options is one. Okay, futures is one, and currency is one. So depend on other asset, use leverage. So for example, if you said instead of buying Apple that is $150 per stock, you said, you know what, I'm gonna buy an options. The options give you the right, okay, but not the obligation to buy that asset. You can buy options, which is a lower price. So you can buy one asset. You can buy 100 share of Apple for about $1,500. Okay, or you can buy an options that have 100 share of Apple for about $200 or $300. So instead of have a lot of money, you would leverage the you would leverage to be able to buy it if you want to. You see, that's the key. Okay, those are the derivative. You don't own the asset. Sometimes you own it, but sometimes you own the asset, you leverage on it, or if you want to buy the asset, you can buy an option to buy it, and then you get to pay a premium. So that's derivative. Derivative is based on other asset. So it's a little bit more involved, but because this is an introduction class, we don't want to go too deep into it. This is some of the classes. I think I might be able to do some classes where we explain everything and keep it at a low price so everybody can buy it. And then the last asset we call cash money. You have it in your hands. You know that. This is saving. Okay, so we got saving. We are money markets account, right? Highly liquid rainy day fund. So if you have a rainy day fund, those are cash money. The cash is an asset. Why? Because you can use it now to make more money. Where you see that you can buy more other asset with it. That's what make it so good of an asset. So when we're talking about cash, as you can see, we said there is four type. Okay, four type of asset: equity, fixed income, derivative, and cash. Okay, remember those because when people are talking about equity market, when people are about future S&P 500 future, now you know they're not talking about it, about the stock, but they're talking about derivative in the market. So that's based on other thing. Futures is commodity market. You'll heard that as well. So and it's based on the production of commodities like corn or cattle. Okay, so we saw the four type of asset, and then next we're gonna see some of the definitions. I the next class you'll see some of the definition. We're not gonna have a video for that, but you can go through in the presentation and get all the definitions. But also you can take that and increase it, learn more about it. Okay, remember this is an introduction class. Keep growing your financial education as you invest more, as you getting more involved. And don't forget to get your paper trade account so you can start practicing some of the skills that we are talking about here. Okay, I'll see you next time, guys.